Welcome back to Talkin Shop episode number 2 with Kyle Van Pelt. We had a good lunch. I had a client meeting. You did a phone call, and now we're back to regroup to continue the conversation. And it's actually going to go a different direction than I originally thought. So I do want to get Kyle's take on kind of what he sees the future of financial services and planning and investments with the combination of technology. So what does that do to our industry? Because if you listen to some people, advisors are going to be replaced by robots and we're not going to have jobs in the future. I obviously disagree as I continue to work every day to build this company. But I want to get your take on that. And then we just had a very good in-depth conversation about the bigger picture of how advice needs to be handled going forward from an advisor standpoint that I want you to comment on as well. So that being said, and then we have a question from our friend Nikki that we'll get to as well. So Nikki, I got you covered. Stay tuned. Let's first go to the tech side. When you look out next 5-10 years, from your perspective, from the fintech world and what you know, what you see, what do you think financial services, particularly advisors and investment advisors, what does that look like as far as the landscape of what we might be doing? Will half of us go away? What do you think?
So I don't think half of the advisors are going to go away. There is certainly a shortage of advisors coming into the profession, and for the amount of adults coming into money that are going to need advice, there's probably not enough advisors, and I don't see as many coming in. But I don't think that technology itself is going to wipe advisors out. What I do see is a huge portion of the market that is just not being served today because advisors like you can't serve them profitably today. And you all have to make money. And I think everybody understands that. But when a lot of these things come out on the technological side that look like threats, I don't think they're threats to you. Michael Kitces has said it fantastically. The total market of people with, I think, a net worth over $500,000 or $1 million, the type of client that most advisors would work with, it's like 7 million people in the United States of America. So all of the advisors are fighting over 7 million people. Well, my really rough math puts it at right around 100 million Americans that are over 18 years old that make like $50,000 a year. So there's 100 million people who need advice, who need planning, but you can't do it because you can't have 1 million clients. So technology is going to serve those people, and I think that's a net positive for America. If things like Betterment, if things like Schwab's $30 a month service, if things like Vanguard PAS can come in and offer an asset allocation and some advice for somebody to call that has $30,000 in assets or $50,000 salary, but those people start actually saving money, they start earning more, they start creating wealth, well, everything in America goes up. That's sort of the equivocal, the tide, a rising tide lifts all boats. So I don't think Betterment is a threat, but I do think those are going to be very formative companies. I mean, I think Betterment's going to go public. I think Betterment is probably going to be worth $50 billion, maybe $75 billion because they're going to serve tons of people. But I don't think advisors go away. And in my time at Riskalyze, Aaron Klein, the CEO, so shout Aaron, always used to say something that I loved. TurboTax, when it came into taxes, lots of people thought it was going to wipe out CPAs, but it didn't. One, it probably made CPAs more valuable for people who had complex situations, but it gave a whole rise to things like H&R Block and Jackson Hewitt. I mean, those services were around, but when TurboTax came into play, those like walk in with most of your stuff done and get some advice, I mean, they exploded. So bringing technology that makes it easier tends to make people who are really good and the experts at their job look even better. So I think that's somewhat of the future. If you look even further out, though, you start to get into the haziness of BlackRock seems like they're going to get into the game in some way, shape, or form. If it is just going to be buying portfolios of products, manufacturers like BlackRock are going to get into that game. I think the big banks are going to come into this space harder. You're going to see more Goldman. You're going to see more JP Morgan. I think you're going to see some more interesting plays from the wirehouses, the Morgans and the Merrills, because they're going to get more into the custody game, I think, and try and put some pressure on Schwab and TD and Fidelity and Pershing to innovate more, because they can bring that scale and that infrastructure, plus they've been working on tighter regulations anyway. So I think you're going to see the banks come into more of a custody position, bringing technology and scale and leverage. I think you're going to see the custodians do more of what Schwab is doing. They're going to get more into the advice game, and the product manufacturers are also going to get more into the advice game. And that's going to push advisors up into more of a specialized position.
So our own custodians may be more of a threat than the Bettermans and tech companies out there.
Yeah, I'm always worried about threat because, again, I think if I'm sitting in the boardroom at Schwab when they're talking about announcing even intelligent portfolios a couple years ago or this $30 a month subscription fee, I don't think they're saying, hey, this is going to be a real detriment to our $1 billion RIAs, our $100 million RIAs who are on the platform. I think they're saying we've got millions of customers who bank with us who aren't doing anything. And if we can come in with $30 a month, that's going to be valuable. Are there going to be some high net worth people who probably opt for that? Yes.
My guess is they opt in that when the markets are doing well.
Yeah.
And then when everything hits the fan and they realize, okay, there is value from having a true advisor and the same person who knows my goals. I think that's when it comes back. And I'm with you. I personally don't view this with threats. And part of that is I'm just naturally an optimistic person. And maybe it's arrogance on my part, but I don't think what I do with my clients can be replaced by a robo-advisor.
Nope.
To your point, I think the robo-advisor is a good fit for people who are getting nothing, but when you take into consideration the time spent, the relationship, understanding clients' wishes, like chat rooms and stuff are not going to be able to replace that, I don't think.
They're not. Now, I will say there's a very real possibility on the future here that I think is coming for a segment of the high net worth market, which is I think you will see a lot of people pay for their planning. So they'll come and they'll pay flat fee, relatively high flat fee to get a comprehensive financial plan from an advisor. And then I think they're going to take their assets to someone like a Vanguard directly or a BlackRock directly. Rather than paying 1% management fee all in for the planning and the investment management, they'll pay $2,500 a year for a plan, and then they'll go get their assets managed for a nominal fee, 25 basis points, something along those lines.
And I don't disagree with you on that. I've got a subscription model that I run, which is not so different. Rather than it being a one-time upfront fee, it's monthly.
Yep.
And then I shared with you this relationship or model that I'm building out for entrepreneurs, which is going to be the same thing. It's going to be an annual fee. It's going to be a low-cost AUM with it. So I agree that I think that's where things are going to go. And I do think that RIAs and in the independent world, we're in a better position to be able to adapt to that a lot quicker. And we can beat the bigger firms to that business model.
You're absolutely going to have to be nimble. But, my final point, and no end game spoilers here, but, I think I'm a huge Iron Man fan. Some people know that. And I think a lot about the relationship between Jarvis and the early Iron Mans and Tony Stark, or in the later ones, Friday and Iron Man. Tony is the mind behind that, making decisions, knowing what to do. And I very much so see advisors being the Tony Stark here, knowing what to do. And then having technology be sort of like Friday, where it's pulling the strings on the actual operations of it. But Friday didn't know what to do for Tony Stark. There's a constant communication, there's a very easy voice and sort of active interface there, but it is a supercharging tool for Tony Stark. And I would argue Iron Man, the greatest superhero, is really Tony Stark's superpower is his mind, but he doesn't have super strength or anything like that. Technology is his superpower. I think it could be the same thing for advisors over the foreseeable future. I don't see anything changing that if you're not afraid of it. If you're not afraid of it, if you learn how to leverage it, people who are building technology, they want to. I am very pro-human, right? I don't think anybody is creating technology to displace humans. I do think everybody building this, there are humans behind it. The intent is to build this to help make our lives easier and to give us, more scale and efficiency.
I'm a Captain America guy. He's my favorite. There's no good analogy for him to this conversation, but I do like the Iron Man. That's a good perspective and a good way to kind of explain the relationship between advisor and tech. But what you described is what I envision. Like I envision down the road, I'm not running the portfolios anymore. There's AI running it for me, and it's way more efficient than I am, and it can handle all the decision making. and be more efficient than me. So I have no doubt. And honestly, I look forward to that because the less time that I do that, the more time that I have to create videos like this or be with my clients, do the things that I really, really enjoy, I will be happy to embrace technology to take that off my plate and make me more efficient. Before we leave technology, let's get Nikki's question because the next part of this conversation is more philosophical. It all feeds together, but it's a different angle. So our buddy Nikki wanted to know your thoughts on why mobile payments are widely used in emerging nations and the U.S. is lacking. So you've got Paytm in India, Alipay in China are used by all age groups. In contrast, Venmo and the other apps are still considered apps for younger generation. What are your thoughts on that?
Yeah, so I think, not to completely cop out on this, I think regulation is a pretty big deal along these lines. I also think, Visa and MasterCard are just so entrenched here that it's really hard to build any sort of payments company without sort of paying the toll to Visa and MasterCard. In other markets, I don't even want to say emerging markets, China has clearly emerged, but in different markets, they don't have those sort of established companies that, for lack of a better term, own the infrastructure. It's just, I think the way our currency system works. Also, too, I think younger people are just earlier adopters. Howard Lindzen talks about this a lot, but young people will operate on 20 different apps for something that they want to do. They might have 20 different financial apps. Older generations, they are, they grew up on newspapers, they grew up on 6 TV channels, right? They're used to having sort of one curated idea for them. And so I think it's slower to do that. The other thing I'll say too, going back just further, I still remember a time when my mom and dad didn't want to spend money on the internet because they were so afraid of what would happen when they put their credit card into the internet or something like that. That's not that long ago. So today it's, I don't want to spend money on my smartphone. Somebody might hack it or something along those lines. But it's coming, right? We talked about this a little bit today. I see a world where almost every company could become a fintech company, either through payments, through lending, through offering financial services, and I think there's not going to be a one winner. I think just like there's 1,000 credit unions, all across the country, and big banks and little banks and all of that, people are going to have their apps tailored to them the way they want it to, and it'll be the same with payment apps. I'm a Square Cash person. I know other people like Venmo. Those things will grow, and you'll see other companies are going to do it too. Apple's got theirs, Google has theirs. The adoption is there, but I do think because of regulation, they can't grow as fast as they want to. And I will also say, I think that our currency and banking infrastructure here was just way better than a lot of the other places. Right. Those other places in India and different things like that were largely unbanked. So putting a smartphone in their hands and turning their smartphone into the bank, that was revolutionary. Whereas here, that was the equivalent of walking to the corner and getting money out of an ATM. I just don't think the need was felt as bad here. And those cool apps are convenience. But appreciate the question. It's a good thing to think about.
I heard long Bitcoin, short the bankers in that somewhere. So just kidding. No recommendations. All right, so to end this conversation, this is one of our longer videos, but I think it's so good. We had this conversation before we started recording. It's actually technically on there, but I'm not going to do it. You were talking about what you thought the future of an advisor looks like, not from the tech standpoint, but from the type of advice and approach that we advisors take. And I want to ask you to kind of share that with everybody, especially because a lot of people who watch this are other advisors. Yep. And this is somebody who is a part of our FinTwit community, a big part of it, but he's not an advisor. He's coming from the tech space. So for the advisors out there, Kyle is an ideal potential client. And he shared with me, I thought, was a lot of great insight and wisdom on where we should be thinking about taking our practices and our personal brands as advisors. So why don't you share with him what you were telling me as far as what you think or where you see advisors needing to be in the future as far as the advice they're providing?
Yeah. So the logic works like this. If, as Justin's saying, AI is going to run portfolios and the big banks and the big product manufacturers are going to come in and sort of take over portfolio construction and management, we've all heard for a while that planning is where the real value is added. And I agree with that. I think it's true. But when you really start to get into it, you have the nuts and bolts of planning, the CFP, the sort of training that every advisor has that cares about this. But I think that advisors have to find their voice, find their style when it comes to planning. I think if you had asked me a year ago, I would have thought all CFPs basically deliver all of their advice by the book. And I've started to learn that that's not necessarily true. If you ask one CFP what to do with a whole life insurance policy and another CFP, you might get different answers. If you ask 10 CFPs what to do with whole life policies, you might get 10 different answers. But I think many advisors they're afraid to truly take a stand on any of this stuff because they think it's going to turn clients away. And the analogy I used before is sort of like painting. My wife is a huge art buff and she loves art history. And what I learned from her that was really interesting is, Picasso was not somebody who changed how painting worked. He was an expert painter on all of the fundamentals, much like you are all experts on the fundamentals of planning. But what he did was he added his voice and his style to the painting, and that's what made him stand out and become as famous as he was, and because he really took a stance. So I think the future of advisors is that if you're going to want to get someone like me, you have to be firm in what your voice and style is and trust that that will be a magnet to people like me to come into your planning style, and not sort of have a generic planning style that you hope everybody comes into. There are plenty of clients. They will show up. And if you stay true to yourself, you be true to your brand, and you actually hold on to and hang your style on the front door, that's, I think, the way that you can not get caught up in the wash of all of this technology.
And one of the things I wanted to point out is that when you're talking about our brand and style, you're not talking about blogging and podcasts and video. Like, that's part of the bigger thing, but you're actually talking about the recommendations made. Like, have a stand that this is what you believe in as an advisor, and be willing to stand firm on that, rather than placing just general advice out there that's kind of open-ended so the client can make the decision. But saying, this is what I believe in, and this is what I want my clients to do, and this is what I've seen to work to get to my clients to their goal, and let the client decide, does that jive with them or not? And if it's not, that's okay. It's the same thing I tell people when it comes to the writing side of things. Like, tell your story on the blog or whatever it is that you do, and let people know who you are. You're going to deflect some people, just like my approach to insurance or whatever it might be might deflect some people, and that's okay.
Yep.
Because they're not going to be a good fit, and there's going to be other troubles. You're going to bump heads other places. So just make sure that you get that out there and let people know. Attract the people that aligns with their values. And my experience has been, it's not so much the details of the plan. The details are important, but honestly, the most important part of the plan is the construction of a plan that a client will stick with.
Yep.
And that is going to have to align with their values. If I write out this beautiful plan on paper, all the charts, 100% Monte Carlo, everything looks great, but it doesn't align with what you think is most important, you're never going to stick to that plan. So while on paper we have this 100% plan, 10 years down the road we've made no progress because the recommendations that go into that plan you're never going to do because you don't believe in them.
Yep.
So rather than have this fake approach or this fake view of the plan and waste both of our time for 10 years, put out your views, let the client decide that makes sense.
Yep.
If it's not, they'll move on to the next one, and you'll find somebody who's a good fit. And now you're working with people that you enjoy, who are going to stick to your plan, and most likely, knock on wood, are going to be successful, which is good for everybody. They're where they need to be. You have the reputation of a good advisor. You're helping your clients, and life is good. So I wanted to make sure that everybody realized when you were talking about that, it wasn't so much about the branding stuff that I talk about a lot. It's more about your approach to planning and your beliefs, putting that out there. Maybe some of that comes through on your writing, but as you're sitting down with a client the first time, letting them know what your views are as a planner. And my final thought on this, because it's not about me, it's about you, is I do agree with you that you get different answers from different advisors. And on my call today, I told the client that. I said that they had done one thing and they had asked me what my thoughts were. I said, you know what, the one thing about our profession is it's very stylistic.
Yep.
That I'm not going to say that my way is the only way to do things. I have my views, I have my reasons why, but at the end of the day, if an advisor takes a different approach for their clients, and they get their goals, they live the life they want to live, they did everything they wanted to do, they pass on the money they wanted to, whether that was a different approach to what I took, at the end of the day, if it gets them to that goal, that's what's most important.
That's all that matters.
We advisors spend a lot of time nitpicking over fees and business models, and while I don't think anybody should be taken advantage of, like that, take that obvious out of the table. If we're doing what we believe is right for our clients and doing it in a fair way and transparent, if it gets everybody to the goal, then I think that's the important part.
That's all that matters. That's why Every advisor I know got it.
All right, so this video was so good, we ran long, and if you don't know this, your smaller digital cameras only record for like 20 minutes. So I mentioned that we had some video beforehand that I'm not going to use that ate up time. So I lost you. This is the first time I've ever had to splice 2 videos together because my editing style is very, very minimal, but I wanted to finish that thought. So you were leaving off with, I had done my rant about style and sticking to it, and at the end of the day, if our clients reach our goals, that's what's most important. And then you said...
Yeah, all I said was, I have not spoken to any advisor who didn't get into this business to help people achieve goals.
Right.
And so I think that is what actually matters. And what I would just say is the final thought on all of that is, I want I know I can't speak for all clients, but I sort of want prescriptive advice, right? It's like when you go to a restaurant and you get a tasting menu. I don't want to have to sit down and figure out what I'm going to eat. Just decide for me. And I think the decision should be very early on. Like, do I trust you and your values and your advice? And then from then on, I sort of just want you to tell me what to do. Hey, Justin, I need insurance. Cool. What kind? How much? Right? And go from there. Whereas I think, again, so many advisors are worried about offending someone or whatever, and they're like, here's 3 options, which one do you like best? And the problem is, we don't know. We hired you, and we hired you instead of Betterment because we expect that you know better than us. So that's like my final thought on that. What I would be looking for from an advisor is, hey, tell me what to do and I'll do it. Help me achieve my goals. Here's my 5 goals. How does this help me achieve my goals? All right, we're in.
And my final perspective on that, to answer something you just said, for probably the younger advisors or the people who are newer to the profession, I know that early on I defaulted to, here's option A, option B. I think you should do option A, but B will get you there, and give the option to the client to choose what they're most comfortable with. I think for some things that works. I think that where over the last few years I've gotten away from that is confidence. Is that I've been doing this long enough. I've seen a variety of different situations. I've lived through 2008. My clients are still with me. I have confidence in what I'm doing that has come with experience, that I can make this recommendation and not have to give you a second option. So I think it comes from confidence of experience, and also confidence from being in a position where if that's not a good fit and you decide, you know what, you don't want to work with it anymore, I'm okay. I'm not trying to find the next client to feed my family. I'm in a position that I can grow slowly, so I can tell you this is what's best. And if you don't want to do that, then you can find another advisor who's going to take you down another path that still might work but doesn't align with my values. So to give you some perspective from an advisor on why we might do that, it might be inexperience. It may also be a lack in confidence that I think with time, if you're an advisor out there and that's where you are, with time, I think you get more confident to say this is what you need to do, no questions asked, in a lot of situations. Now, some of them, there might be an opportunity to say, hey, you could do a 30-year term or you could do a 20. I think you should do 20, but if you feel better about 30, it's an extra $5 a month or whatever. It's not going to hurt things. But for certain things, I do think it's easier now, being in the business a little bit longer, for me to say this is the one option and this is what we're doing, and not forcing you, but making you buy into it because of the confidence behind it. So
cool.
All right, well, there you have it, advisors. You have a lot of insight on what tech is going to be doing and where we're going to be going with that. But then also, I think even more valuable, the perspective of a client and what they are wanting from us going forward. So some of us, I think, are heading in that direction, and we see that. I think there's a large mass of advisors that probably will never see this video that don't understand it. But I think you've got to listen to Kyle, what he's looking for, and just put that and remember it and try to craft the future of your business going that direction. So Kyle, I appreciate you making the trip. We got to get you back to the airport so I can get back to go to practice, just wildness. But I've enjoyed having you here.
Man.
Hopefully everybody out there has enjoyed it. If you're not following Kyle, you definitely should. I think he is a gem inside of FinTwit that most people don't know. Like, I think your perspective on what we talked about today, FinTech and beyond, has been huge. And the stuff that we talked about offline was very meaningful to me. So
cool.
I just want to encourage you to keep putting stuff out on Twitter so we can all benefit from your knowledge. So thank you all for watching. Give Kyle a follow. I'll have all the links and stuff when I get this up on the blog. But this will probably be YouTube only for the first couple of days until I have a chance to blog. So
cool.
Thanks for watching. Kyle, thanks for coming. We'll see you all in the next episode.
Thanks, everybody.